The Pi network launched its open mainnet on February 20th, 2025. This event was eagerly awaited by a global community of enthusiasts and investors who had been following the project closely since its inception. The launch was seen as a pivotal moment, marking the transition from a test phase to a fully operational blockchain network. This marked a significant step for the project, as it opened up new possibilities for transactions and applications on the Pi network. The excitement was palpable, with many seeing this as the dawn of a new era in decentralized finance. The initial IOU prices were between $50 and $300, reflecting the high expectations and speculative interest surrounding the project. These prices were based on the perceived potential of the network and the enthusiasm of early adopters. However, the price dropped sharply upon launch, a common occurrence in the volatile world of cryptocurrencies. This sudden drop caught many by surprise, leading to a mix of disappointment and concern among investors. It reached $2 to $3 on exchanges, a significant decrease from the initial IOU prices. This rapid decline highlighted the challenges and uncertainties that come with launching a new cryptocurrency. By March 1, 2025, Pi was trading around $2.08. This stabilization at a lower price point indicated the market's initial reaction and adjustment to the new asset. This price was observed on exchanges like OKX, MEXI, HTX, and BitGet, which are some of the major platforms where Pi was listed. The widespread availability of Pi on these exchanges made it accessible to a broader audience. The launch was highly anticipated, with many people eagerly waiting to see how the market would respond. The initial excitement was tempered by the reality of the price drop, but the community remained hopeful. The price drop surprised many early supporters who had hoped for a more stable and higher valuation. This reaction underscored the unpredictable nature of cryptocurrency markets. The drop highlighted the volatility of new cryptocurrencies, a reminder that the market can be highly unpredictable and influenced by a variety of factors, including investor sentiment and market speculation. It also showed the difference between pre-launch speculation and market reality. Many had speculated on the potential value of Pi, but the actual market performance painted a different picture. The launch marked the beginning of Pi's journey in the open market. Despite the initial price drop, the project continued to garner interest and support from its community. It remains to be seen how the price will evolve. The future of Pi will depend on its adoption, technological advancements, and the broader market conditions. The journey has just begun, and the community is watching closely. PiCoin is currently traded on various exchanges. These include OKX, BitGet, HTX, and Gate.io. The trading price varies depending on the exchange and market demand. The price in India, for example, has ranged from 157 rupees to 192 rupees. These prices are based on an exchange rate of 87.5 rupees per USD. Trading volume and liquidity are crucial factors. They influence price stability and market depth. However, Pi is not yet listed on major exchanges like Binance. This limited availability restricts its market reach. It also contributes to price volatility. The absence from major exchanges is a significant factor. It limits the potential for wider adoption and trading activity. Several factors influence the price of PiCoin. Understanding these factors can help investors make informed decisions and navigate the volatile world of cryptocurrency. One crucial factor is the high supply. The sheer volume of PiCoins available in the market can significantly impact its value. Billions of PiCoins were pre-mined. This pre-mining process means that a large number of coins are already in circulation, which can dilute the value of each individual coin. This abundance impacts scarcity and demand. When there is an oversupply of a cryptocurrency, it can lead to lower prices as the market becomes saturated. The total supply cap is set at 100 billion Pi coins. This cap is intended to control inflation, but it also means that there is a finite limit to how many Pi coins can exist. Another factor is the limited utility of Pi. While the Pi network has ambitious plans, its current real-world applications are still in their infancy. Despite having over 100 apps and events like PiFest 2024, real-world use cases remain limited. This limitation can hinder the coin's adoption and overall value. This lack of practical applications affects investor confidence and demand. Investors are more likely to put their money into cryptocurrencies that have proven utility and a clear use case. Market volatility also plays a significant role. The cryptocurrency market is notoriously unpredictable, with prices that can swing dramatically in a short period. Cryptocurrency markets are known for their price swings. These fluctuations can be driven by a variety of factors, including market sentiment, regulatory news, and technological developments. Pi experienced an 80% price fluctuation in its first week. Such dramatic changes can be both an opportunity and a risk for investors. The market experienced $1 billion in trading volume on its launch day. This high trading volume indicates significant interest, but also highlights the speculative nature of the market. These fluctuations demonstrate the speculative nature of the market. Investors need to be cautious and conduct thorough research before diving in. They also highlight the risks associated with investing in new cryptocurrencies. While the potential for high returns exists, so do the chances of significant losses. Understanding these factors is crucial for anyone looking to invest in Pi coin. A segment of the Pi community believes in a future price of $314,159. This price is linked to the mathematical constant pi. However, this belief is not endorsed by Pi's co-founder or the Pi network team. The $314,159 prediction is based on speculation and community sentiment. This global consensus value lacks concrete evidence or market analysis. It is important to differentiate between community-driven speculation and realistic price predictions. The GCV highlights the enthusiasm within the Pi community. However, it is crucial to approach such predictions with caution. Relying on factual information and market analysis is essential for making informed investment decisions. Section 5. Gazing into the crystal ball. Pi price predictions. Predicting the future price of any cryptocurrency is challenging. The market is highly volatile, and numerous factors can influence the price, from technological advancements to regulatory changes. However, some analysts have made predictions for Pi. These predictions are based on various models and assumptions, each with its own set of variables. Some predict a price of $5 to $10 by the end of 2025. This range is considered conservative by some experts who believe that Pi's unique approach to mining and its growing community could drive higher valuations. This translates to about 500 to 1,000 rupees in India. For many, this could represent a significant return on investment, especially for early adopters who mined Pi when it was still in its nascent stages. These predictions are based on the assumption of increased adoption. As more people start using Pi for transactions and as a store of value, its demand could rise, pushing the price higher. Factors like listing on major exchanges and the development of real-world use cases are crucial. Pre-launch predictions varied significantly, reflecting the uncertainty and speculative nature of the market. Some analysts predicted a price of $93.41 to $220.46. These higher estimates are often based on optimistic scenarios where Pi achieves widespread adoption and integration into various financial systems. Others predicted a range of $76.31 to $323.39. Such wide ranges highlight the speculative nature of these predictions and the many unknowns that could impact Pi's future value. These predictions highlight the uncertainty surrounding Pi's future value. While some see great potential, others remain cautious, pointing to the many challenges that lie ahead. It is essential to consider these predictions with a degree of skepticism. As with any investment, thorough research and a clear understanding of the risks involved are crucial before making any financial decisions. Section 6. Mainnet migration, a critical step. The Pi network initiated a mainnet migration process. This migration was a crucial step towards decentralization. Users were required to migrate to the beta mainnet by November 30, 2024. This migration was in anticipation of the public mainnet launch. The mainnet migration aimed to enhance the network's security and scalability. It also aimed to empower users with greater control over their Pi holdings. The success of the mainnet migration was a positive development for the project. It demonstrated the team's commitment to delivering on its roadmap. The mainnet migration also paved the way for future development and adoption. Section 7. The legal landscape trading Pi in a regulated world. The legal and regulatory landscape for cryptocurrencies varies globally. In India, trading and holding Pi is legal. However, there is a 30% tax on profits from trading Pi. A 1% TDS, or tax deducted at source, is also applicable to all transactions involving Pi. It is mandatory to conduct transactions through FIU-registered exchanges. This ensures compliance with regulatory requirements. However, the legal status of some platforms like HTX and Gate.io, remains unclear. This lack of clarity poses challenges for users. It is important to stay informed about the evolving regulatory landscape. Users should comply with all applicable laws and regulations related to trading and holding Pi. Section 8. The future of Pi possibilities and challenges. The future of Pi network is filled with both possibilities and challenges. The project has gained significant traction with millions of users. However, it faces challenges in terms of wider adoption and real-world utility. The development of a robust ecosystem is crucial. This includes partnerships, dApps, and use cases that demonstrate the value of Pi. Addressing regulatory concerns and ensuring compliance is also vital. The Pi network team needs to focus on building trust and transparency. Clear communication and delivering on its roadmap will be crucial for long-term success. The future of Pi depends on its ability to overcome these challenges. Section 9. Conclusion. Pi network at a crossroads. The Pi network has come a long way since its inception. It has achieved significant milestones with its mainnet launch and user base growth. However, it now stands at a crossroads. The project needs to translate its early success into tangible value and real-world adoption. The price of Pi will ultimately be determined by market demand and its utility. The Pi network has the potential to revolutionize the way people interact with cryptocurrencies. However, realizing this potential requires a focus on development, adoption, and regulatory compliance. Only time will tell what the future holds for Pi network.